Good morning. It's Harvey Jackson. We're just going to get through some different news items, but the first one I want to talk about is the Carney and a couple trade ministers. Again, his entourage of the clown show that he brings down there went down to have some talks about cutting a deal. Of course, no deal was done. Trump promises trade fairness for Canada, non-committal on USMCA. Trump suggests the United States could ditch the UMCA trade agreement. Another area that I highlighted here just for is potential deals were not close. And you keep on using these words, the talks. And again, talks are not deals. Like, get your crap together and get some things done. We can negotiate it, and it would be all good, or we could just do different deals. So that's what the suggestion is. Trump just wants different deals. He wants different deals for each in every country, and yeah, I don't see the USMCA being a something that's going to hang on the way Carney is believing it here. So, and again, is he working for the best interests of all Canada? I don't know. 75% of the exports to the United States are vulnerable, and we all know that. But it's just another thing that we got to keep in mind. We've done exactly the same thing as we've done with the crude oil, with so many parts of our industry or Canada being connected to the U.S. with these trade deals, free trade, that things were just we're too connected. We're not globally connected. And in these here, it said try to get a deal. Well, that's what Doug Ford had mentioned, and then even Polyev, negotiate a win. Well, there's no win here. I think the people of Canada will love us again. Most of them still do. There's probably a huge percentage of people not traveling to the U.S. right now. Tyson Cargill pay $88 million to consumers over beef pricing lawsuit. You can see that their Competition Bureau actually does something. And former company that I work for, Cargill, looks like they're under hot water. But again, Competition Bureau in Canada allows all kinds of crazy things to happen, but they not in the U.S. Indonesia on course for the B50 diesel. That's what's tightening up the oil. That oil complex, and also helping out the soybean oil alongside it. More news here. You can see the good percentage of a lot of grain has been harvested. Canola is at 92%, and you see some corn is actually grain corn. And again, they put this in here, but grain corn finally hit the spectrum here, and it looks like Manitoba average is 8% harvested already, and the soybeans are at 69%. So move along. There isn't much harvest left, really. Here's the alpha trade.
So to the December corn. Again, we've left up here this inverse head and shoulders pattern. Again, I really like what I'm seeing here. You got that right shoulder that formed here right at that 62% retracement level. Now, again, the biggest thing is to get it back above this neckline here. Above this neckline here, you make a run towards the upper 460s, 470s. Now, again, it's going to obviously have to be backed by momentum, but you have a secondary Fibonacci retracement level here between 436 and 446 that we'll have to get through, and obviously that 200-day EMA here as well. Again, if you haven't rewarded any of this move right here, I would do so along this neckline area. Let's call it right around that 428.5. Bring sales up towards 40%. If you need to look for some reownership, look for any type of pullbacks or buying opportunities in this vicinity. Let's call it between 407, 415. I think those are all good buying opportunities here if you need to price and reown. Those of you looking at a much more of a longer term play, I do think that selling May straddles, or strangles, I should say, selling 415 puts, 480 calls, selling that for 18 cents or better. I think that's a very good trade, but just, it's going to be a trade that you're going to be in here for a little while. Margin is not bad on that one at all.
Just different trade ideas. I was sitting with a client, and we're talking about straddles and strangles when the market's kind of chopping away sideways against cash grain sold. So you can actually, go long your grain and buy sell your straddle, and that would give you some protection, but it still comes with a margin requirement, of course. So, quick look at the weather. You can see that the warm in the U.S. Will probably help speed up some of that harvest. So harvest percentages are probably going to move quite quickly in the next week, 10 days. Frost is hitting a good part of the eastern and even just south of the border here. Rain hitting in the next 7 days, Saskatchewan and into Manitoba. Here's the kind of look at what the rains are, and harvest or planting percentage is actually going on pretty good here too in the South America, and those are the key growing areas there that I just circled. Oilseeds, just or just all prices. Canola is up again for another day here, just a buck, almost a dollar. Rapeseed is up almost $2. Soybean oil is up zero point 0.4 of a penny at 54.44. Palm oil is at 45.06, up 62 ringgit. Crude West Texas is up three quarters of a buck at 62.45. Soybeans at 10.23, up $1.03. Spring wheat is just basically unchanged, maybe down a couple pennies, and then your spring wheats and your Chicago wheats are down a penny to a penny and a half as well. And Canadian dollar up just slightly as well. Just quick look at these complexes from basically the beginning of January and percentage move. So the bar chart is actually your soybean oil. Right behind it is your palm oil. So the palm oil is at just 8.9%, and soybean oil is up 13.5%. And then when you look at this actual seed complexes, you've got soybeans down just 0.6%, and canola is down 2.5%. Another thing that I was been talking about with a few clients is just here's your futures values, right, and the difference between them and the days between them as well. But just calculating full carry at 7% interest rates, it does suggest that you're and paying for commercial storage rates at 88%. It's actually telling you that if you're going to make a sale and you can afford to, or you got the bin space and everything, and you can even tap on your line of credit if it's at 7% or whatever your number is, it's actually telling you to sell in the future, not right now, because it's more than paying for your interest to carry it. But definitely look at these values here when you got 40 and 45%, or 42 and $45 carry to go all the way out to November and July. Look at making those sales if you're wanting to sell grain, because that's a big carry. That is paying you to sell the future, not right now. Here's your canola futures, just basically chopping sideways here. It's not really doing anything. Up against a 20-day moving average. It's not traded through it at all. We're getting close to it, but your short-term moving average is definitely traded there. European rapeseed, it's actually trading through a couple of the short-term moving averages because it's been chopping sideways. It's not as steep a curve, but it's up against another one up there. The price of the Canadian or price of European rapeseed minus Canadian canola. So European rapeseed is about $144 to $145 more expensive than Canadian canola. So if it can find a home, it may be able to with that kind of price differential. Soybean oil futures chopping sideways here, still making lower highs here so far. So we'll see where this one settles out here. But the 200-day moving average definitely has supported that market, and we're up against a short-term moving average there now too. Soybean futures as well, same idea, but it looks like the 200-day moving average is definitely above it here, and could put some. If it gets above there, then it's got a little bit of a momentum probably to get towards that trend line, and to make some back to some higher highs that we've seen. Crude palm oil. This is the reason I showed this is to show that if we do get back to the 5,000 ringgit, that's where some of the analysts are kind of predicting. Canadian dollar chopping sideways right on the trend line, but if it's going to break lower, that's the first area is basically the low that it made back there. But I'm not trying to call a direction here, but it definitely looks like it's going down, which would be good for basis levels. U.S. dollar index right up against this pivot extension here. Minneapolis wheat keeps grinding lower. Really nothing to tell you there other than it just sucks. Kansas wheat, same idea. It's been a long slide. We're going all the way back to July, but if you just take that high out of there that we got there, you could probably extend that all the way back into June. Chicago wheat, the same kind of idea. Milling wheat, it looks like it's been a channel sliding for the whole crop year. A couple of questions that I asked, one of the AI features on Windows operating machine. I just said, and I've been making this point too. Winter wheat accounts for 65 to 70% of global wheat production, and it's planted right now. So the next question I asked was, when does that planting normally occur in the northern hemisphere? And it basically gives you a range of mid-September to early December. It all depends on frost-free and when frost actually comes, but planting season is now. In other words, and planting decisions on these prices are probably making it very difficult for anybody to even consider growing wheat at these price levels that we're seeing across the northern hemisphere world. Corn futures trading sideways here. Darren Fesser was talking about some upside, pricing opportunities when you get up into that 200-day moving average and the extension. This report is not likely to happen, and the next report for Canada is not until December.